Hey, what's up, guys? Sam here, and I'll be doing the weekly market review for the last Friday of 2025. So, another week is going to be in the books here in about a couple hours, and not only that, but then the last day of 2025. So, there's going to be lots to catch up on this weekend. You're going to have a monthly candle that will close, a weekly candle, obviously, the monthly candle, as well as a yearly and quarterly candles. So lots to cover. Let's dive in where we normally dive in, which is going to be on the indexes, and then we're going to dive into some sector work after that, and then we'll kind of round out with all the things that we usually look at, which is going to be things like volatility, currency, bonds, interest rates, things like that, and basically just look to tie it all together going into next week. So let's dive in here on SPY. Kind of a quiet week, obviously. It's a short week given the holiday and whatnot, and overall, an improvement in pretty much everything. You have a higher high. Oh, excuse me. Let's start with the weekly candle. You have a higher high, a higher low. And if we were to close exactly here, you would have a higher closing print than you did last week. So overall, the candles here are getting kind of small, right? These are pretty small body candles, but candle to candle, bar for bar here, it all looks completely serviceable, and I would say that it absolutely leans more bullish than not. If there was any question, I would always reference the score, and the score is a max bull, so nothing too bad there. Daily chart, kind of the same thing. This one's just neutral up, but it's improving, right? You're starting to get the crossover here. You've had the thrust here. You have the higher low. You have an attempt here to push above that swing high there, right around 690. So all of that looks completely serviceable as well. So I don't really see any issues here on SPY. It's just incrementally improving week to week. Still not blowing the doors off the joint, but overall significant improvement. Let's go to the Qs. So very similar to last week, where I kind of already had an idea of what I was going to tell you. I already have an idea of what I'm going to tell you this week as well, and it's mostly going to be found on the multi-day squeezes. So we'll see if we have some time to take a look at this, but NQ, which is going to be the NASDAQ futures, last time that I looked, they had a daily squeeze, a 2-day squeeze, and a 3-day squeeze building up. So the goal of the video is to try to find problems with that squeeze, right? Because I think the easy thing to say is, well, it's a squeeze in an up market, it's going to go higher. And most of the time, that's actually, as simple as it sounds, probably the correct and simplest approach. Because we're able to look at so many different things in this video, given our allotted time that we have together, I'm going to try to avoid the obvious stuff and just look for problems. And if by the end of the video we can't find any definitive problems, then we just go with our default status quo point of view. So here on the Qs, kind of the same thing, a little bit weaker on the weekly time frame. This bar here from way back here gave you some thrust down that hasn't been resolved, but in general, this is not a major signal. Why? Because this signal is the primary signal. So always focus here first before you look here second. Now, would it be better if the lower indicator was also green, kind of like what we just saw on SPY? It would be, but this is completely serviceable. This is still a bullish situation. It's a bullish 75%. Daily chart, kind of the same thing, right? Last week, the major signal that I had to give you was this bull slingshot that had developed right there. That developed on the Friday candle, I believe, of last week. So I was like, well, that's good enough to get you a push, and you did get a push in the QQQ. So in general, I think tech here has a little bit of room that it needs to go if it's going to catch up with the SPY. And if it's going to catch up with the SPY, then I'd be looking for the previous high on Qs right around 637. Let's jump over to the IWM. So far the thesis of the squeeze is favoring the upside is still 100% intact. If we look at the IWM here, somehow it's gone into a weekly squeeze. Very impressive. The fact that this has a weekly squeeze is encouraging because you get that compression as well as a very bullish score. Some would argue a max bull score with 100% there. And you know, that just gives you that compression that leads to expansion, that juice that is necessary. The daily chart's somewhat unremarkable. Daily chart says it should be buying kind of previous highs, kind of in that zone. So maybe just wait for, I would be waiting for an internal trigger here, maybe a 1 hour trigger on the IWM, get a 1 hour up arrow, and that would set this off, which it doesn't have at the moment. But I don't really see any major issues here. I think for myself, if I can get a pullback here into about 245, I think that's certainly viable. It might even be viable above that level, and I'd like to play this on the weekly time frame. However, I'll shoot straight. Most of the time, if I see a signal in IWM, I probably just look to express it in the SPX, for better or worse, right? So we'll see how this goes, but this new weekly squeeze on IWM is actually pretty impressive, and I wouldn't sleep on it quite just yet. We go to the Dow. We never look at the Dow, but maybe we should more often, because right now you can see that this one is the only one of the three that we've looked at so far. I guess this would be the fourth that is actually max bull, right? So completely great chart. I don't see anything wrong with it. This would be a buy right around the daily 5 or the daily 10. I don't have those on my chart at the moment. I typically keep them on another chart, but that would be where you would be looking for a buy on DIA or the Dow. And of course, given that the Dow is the strongest part of the market, that implies usually that financials or healthcare, to some smaller extent industrials and a little bit of tech, is in fashion. Usually though, if I see the Dow leading, I kind of tend to think that it's mostly due to financials and healthcare. So we'll see how that develops, but this is by far the best looking one so far. So we've looked at all four indexes, and that I haven't seen anything that would change my mind in terms of the bias on the actual signal itself, which is going to be the multi-day squeeze on the NQ, right? So keep in mind the whole point of the video is I already come into this with a bias. We are in an up market. You know, you're going to get seasonality kicking in next week a little bit. And the bias is, of course, you know, you're in an up market, you have seasonality kicking in. Can you get those multi-day squeezes to fire long? The bias was that they would fire long based on kind of the low-hanging fruit that is, you know, a bull market. And so far, just looking at the four indexes, I haven't seen anything that would change my mind on that. If we look here at the dollar, again, I don't get a ton of signals from the dollar necessarily. Just because if the dollar were to go up, could I tell you what stocks are going to do? Probably not. If the dollar were to go down, could I tell you what stocks are going to do? Probably not. But I do want to see this kind of being more down than up, because I think in general a down dollar will help push prices of things higher for no other reason other than the price of everything is denominated in dollars, right? So if you take a dollar and you devalue it, the price of the thing that was measured by dollars goes up. Of course, you could have a very long argument as to whether no value is being created, which I would probably agree with, but price go up is the name of the game, right? So far here on the dollar, right, the weekly chart starting to die again. It never really showed any signs of life. The daily started getting a little spunky here, but it kind of failed exactly where you would expect it to, which was its kind of previous double top as well as the 200 moving average. So I don't really see anything here that would be a major issue on the dollar. And of course, this is going to be a slight point for the bulls. So things just continue to kind of build in their favor a little bit as we go along. Let's go to the HYG next. So HYG here, not really anything to discuss, just kind of a gray chart. You can see it for yourself. But is it above the key level or below the key level? Above the key level that I have is 80. So as long as this is above 80, I'm going to side with the bulls on this one. It's not a very strong kind of point here, right? If we're kind of mentally giving ourselves points or subtracting points for things that are bearish, I would say that this is maybe like plus a quarter of a point, right? Like where the dollar might be like half a point, the indexes might be a full point. This would be like a quarter point based on the position here. If this were more bullish, I'd be much more inclined to give it more points. But for now, this just favors the bulls, but it's nothing that's going to blow your hair back or anything. I don't see this as favoring the bears at the moment. So that is going to bode well for the overall thesis that we have. Let's go to the VIX next. So the VIX here is getting pummeled pretty good. right? A 13, 14 VIX here certainly makes me a little bit uncomfortable. You're right. Always feel a little bit more comfortable when the VIX is a little bit higher, just because I start to question how far, how much lower this could push. But I suppose there is technically room for it to push into about, with a 12 handle to about an 11 handle. So do I love seeing the VIX this low? Not really. Oftentimes that can kind of set up a day or two where it needs to breathe to the upside before it can come back down. But I think the path here is rather overwhelming for now, and this would be a full point for the bulls. Maybe I can argue subtracting, a quarter point from that, just because it's so beaten down that at some point it needs to breathe to the upside. What does that mean? Think of like an air pump, right? I always use the same analogy, and I could probably stand to draw it better. But you have an air pump here. This is your little plunger thing. You push the plunger down, and air comes out of the pump that way. So you push down, air comes out. Then once it's been pushed down, it kind of looks like this, where the plunger's at the bottom. If you were to push when the plunger's at the bottom again down, do you get more air coming out? And the answer is no, right? You got to let the plunger go back up. Is it called a plunger? Let's go with the plunger. You got to let the plunger go back up, and then you can push it back down to get more air out of the thing, right? So that's kind of what I'm seeing here on VIX, but it certainly sides with the bulls. So let's jump over here to the sector work, and I just kind of want to take a quick look around and see what's setting up and what's aligned. So these are going to be the sectors, as well as the SPY, and as well as the Mag 7 index. I'm going to include this new Mag 7 index in the video description below. So while you're down there, copying this into your platform, the way that you use it is you just basically take the formula, copy and paste it into your platform. It's going to create a chart. The chart will look like this. And essentially what that is a chart specifically of the Mag 7. And it's been price weighted and market cap weighted so that it's, mathematically sound. And it just removes all of the other things in the NASDAQ other than the things that are the biggest things, right? So it kind of gives a unique point of view of the market, in my opinion. I'll include down this new formula. I'll include this in the video description below. While you're down there copying the formula, I'm going to ask that you drop us a like on the video and just drop us a comment as well, just to help us out with the algorithm. It helps more people see the video. So just let us know if you're buying anything going into next week. Did you sell your silver at $15 an ounce like I did and live in constant regret? Or what are you going to have for dinner later tonight? All of them are acceptable. Comments below. So as we look here, I'm looking for good scores and I'm looking for squeezes. And as we look down here, you can see each one has a squeeze indicator, and I actually don't see any major daily squeezes here on anything other than the Mag 7, right? So the Mag 7 as a basket has a squeeze, and then, okay, so I say, well, that has a squeeze. Where can I look to play that? Well, understanding this is the Mag 7, this is going to be very tech heavy. Do I want to focus on things that are in ARC? And the answer is probably not, right? It's a lower quality chart than the Mag 7. Mag 7 is a 40 out of 100, and this one's only a negative 25. Could I focus maybe on XLC, which is a 70? I could. Could I focus on SMH, which is a 40, which matches the structure of the Mag 7? I also could. Could I better focus maybe on XLY, which has Amazon and Tesla in it as tech representation, and that one's an 80, so I definitely could focus on that. XLV, although it's an 80 and certainly looks good and plays well with the Dow that we saw earlier, that one's not in the mags, so I'll cross it off. If you're trading healthcare, it looks better than a lot of things, so I wouldn't knock you for it. Obviously with XLU here, it's not in the Mag 7, nor does it have a tradable long score at the moment, so I'm just going to ignore that. XLP, I'm just going to ignore that in perpetuity. XLI, certainly a good tradable chart, kind of the same conversation as XLV, but it's not in the Mag 7, so it doesn't have a squeeze. XLF, by far the best thing on the board. This was the best thing on the board last week. It remains the best thing on the board this week. Most things kind of flow through the XLF as well. And I know that JPM has a weekly squeeze, and I think XLF has a weekly squeeze. So even though I'm not necessarily going to say, XLF equals Mag 7, because it doesn't, the score here, as well as the weekly squeeze, is going to keep me very interested in this. So, so let's just make sure that we all are all on the same page. I started by looking for squeezes, right? And you can see down here below, red dots equal squeezes. The only place that I see one is on the Mag 7 index. From there, then we say, okay, well, that means tech. Where do we find the pockets of strength in tech that make the most sense? And frankly, the pockets of strength that make the most sense are in XLY and XLC, and to a lower degree, SMH, right? So NVIDIA's building a weekly squeeze. The NASDAQ has the daily, the 2-day, and the 3-day squeeze on the NQ, right? So how to play this? Well, for myself, I probably will just play it through the QQQ, right? Now, if I wanted to get really in depth, and maybe I'll do this weekend, I'll try to find something in the XLC, Google, potentially, XLY, maybe something like Amazon or Tesla, or SMH, something like TSM, Avgo, NVIDIA, things like that, and play it that way. If I didn't want to go through this process, however, there's enough here, from what I'm seeing, to just outright buy the QQQ into January. I will say this, the best thing that has the most amount of edge across the board is not what we just talked about, however. The best thing that has the most amount of edge, because it has a max bull score and it has a weekly squeeze, is actually the XLF. So next week, based on everything that I'm seeing here, I see plays in the banks, XLF, JPM, Goldman, all those names. And I see specific plays in the Mag 7 names. Because I'm not necessarily, at least during this video, looking to deep dive and see where I can find the most mojo, I would just basically play the field and play it through the Qs. So the plays for the week, next week, are going to be the QQQ, although you can certainly get more granular and probably better, but betting on the field. And the other one is going to be the banks via XLF. All right, guys, that's my time. I hope you had a great Christmas. I hope you had a chance to hang out with some loved ones, tell them what they mean to you, because we're only here for a short time. So I hope you had a chance to do that. And if you didn't have a chance to hang out with any loved ones and you were just on your own, look at the person in the mirror and tell them you love them. And that's enough. So thanks as always, guys, for being here. Appreciate it. Drop us a like, drop us a comment, and I'll see you in 2026. Cheers.